Another creator has entered the chat in the discussion between Mr. Global and I on the housing crisis.
Off the wagon really does mean well, but he grossly underestimates the government's role in all this.
Well, hey, I do love to be proven wrong. It's how we learn. What do you got for me?
Off the wagon lays, it seems like 100% of the blame at the low-life scumbag predatory lenders.
I did? You see, I feel like you watched my entire videos all the way through, and I really thought I mentioned something about the government being to blame. Perhaps it was this clip I'm thinking of. Global in his video asserts that he believes that it was the government's fault who did this, which I completely agree. That was just one line, though. I'm sure it was easy to miss. Was there anything else? Depository Institution Deregulation and Monetary Control Act of 1980. Basically said, fuck antitrust laws in the financial industry and allowed big banks to do big mergers. And it deregulated interest rates, allowing banks to charge whatever interest rates they wanted. If I'm not mistaken, that was a government policy about deregulation I just rattled off there. Was it not? You can go back to Nixon and start blaming some of this on him. Nixon was the president of the United States, which would make him the government, right? The one such evolution is where the Federal Reserve under Clinton deserves a little bit more of the blame. Was that just me blaming the Federal Reserve? I mean, I guess technically the Federal Reserve is a private bank, but it is tied to the government, and it's not the type of bank that I was just informed I was blaming 100% of everything on. It's just weird. But by 2004, we had the decider in office, and he made the decider that we didn't need no more regulation. No, maybe that one's my fault. Maybe my impression wasn't that good. I was referencing George Bush, you know, the little one who in 2004 was the president, which would have made him the government. My bad. Impressions aren't my strong suit. Anyway, that was just my first video. Maybe you missed that one, and it was my second one that gave you the impression that I was completely blaming the banks and not the government. Well, you continue to say that it's, you know, the government's fault, which we can both agree on at a certain point. Strange. That was actually pretty early in my second video where I was agreeing with Mr. Global on the fault of the government. From the fact that the government was, like, allowing it to happen because they weren't regulating the banks and had very little oversight. Did you have a whole spiel in your video about how I was wrong because it's the government's job to regulate things and have some oversight? It's weird. It's almost like I said exactly that in the video you're responding to. I don't know what the fuck happened there. The catastrophes that can be laid squarely at the feet of an unregulated and greedy private sector. There it is. I said that it could be laid squarely at the feet of the private sector, but I had that pesky little qualifier there. What was it again? Unregulated private sector? Almost like I was saying that a lack of government regulation allowed the banks to do the things that caused the crash. So genuine question, did you manage to miss all of that somehow and all of the clips that I didn't include? Or did you consciously omit it to make it seem like you had some valid contention with my argument, alluding that I was incorrect while then going on to repeat the exact same fucking argument I just made over 2 videos? Because it's just sort of what it feels like.
Mr. Wagon, your numbers are wrong, and so are a lot of your assertions about first-time homebuyers.
Well, we're off to a great start, but you know, let's hear it.
Government is supposed to be the wall of stop. When that wall of stop isn't there to protect the average consumer, guess what the predatory lenders are going to do?
You don't fucking say. Seems like we need to revisit my original video again. Deregulated interest rates, allowing banks to charge whatever interest rates they wanted. You know what happens when banks can charge whatever interest rates they want? They start subprime lending. Because lending to high-risk borrowers gets more appealing when you can charge whatever interest rate you want. It was also predatory. Is it just me, or are you trying to make an argument to prove me wrong by repeating almost verbatim the exact same fucking thing I said in my very first video? Minus the witty and sarcastic style. Because once again, it's kind of what it feels like.
A huge chunk of those mortgage-backed securities were made with bad mortgages, but they were able to be written into these contracts because of the deregulation of the Commodity Futures Modernization Act, signed into law in 2000. And guess what happened to subprime loans after that legislation was passed? They skyrocketed. The year before that, the repeal of Glass-Steagall, which allowed banks to get more than 10% of their income from investments.
Here it seems you are contesting my assertion that repealing Glass-Steagall did not cause the recession, leaving it in place would not have prevented the recession, and while the lack of Glass-Steagall regulation may have indirectly made the recession a little bit worse, there is no direct correlation between Glass-Steagall being repealed and the Great Recession. Now let me be clear, I am not a subject matter expert on this or really anything. What I do seem to be decently okay at doing is researching what subject matter experts say, what their data they've collected is, compiling that and disseminating it in a somewhat digestible fashion. So when I say something like Glass-Steagall didn't cause the recession, I'm not giving you my opinion. I am just giving you the data and the opinions from the subject matter experts. Like here, PolitiFact rating the statement that repealing Glass-Steagall had not a single solitary thing to do with the financial crisis as mostly true. And in that same article, they go on to say that there's not a single prominent group of economists that argue that the repeal of Glass-Steagall caused the recession. PolitiFact not good enough for you? Well, what about NPR? Because they've got a whole article on it as well, and thankfully they give us a short answer at the end of it, stating that the changes to Glass-Steagall was at best one factor in the financial crisis. Or what about Brookings? Glass-Steagall would not have have prevented what Bear Stearns, Lehman Brothers, Washington Mutual, AIG, and Countrywide did in the lead up to the financial crisis. And in my previous videos, I provided some of the numbers that they provided for all that. But if you have a problem with my opinion on Glass-Steagall, you can take it up with the world's foremost economist, because I'm just the messenger. And forgive me for not throwing out their opinions and data because you happen to throw a chart up on a screen and try to loosely correlate it to the date that some policies were signed. That's not causation. I'd barely consider that correlation.
Government-sponsored enterprises were not only forced to secure subprime loans, they were forced to purchase the securities based off of those bad loans.
Except that's not really true, is it? CRA, which was the program that was specifically designed to lend to lower income borrowers, was stated to have almost no impact on the subprime loan crisis. Only 6% of subprime loans had any connection to that law at all. The fact that 84% of subprime loans were issued by private lenders. Private firms accounted for 83% of low income lending. In fact, apparently only one of the top 25 subprime lenders was subject to the laws that you're referencing here. And pretty much all of the subprime loans held by Freddie and Fannie were originated outside of GSE programs by private lenders. Then the private lenders who lent to people who would have never made it through the traditional mortgage processes required by government-backed securities rolled those high-risk loans into securities to hide them and then have the credit agencies give them a AAA rating saying that they were safe securities. Freddie and Fannie exclusively bought AAA rated securities. So no, the government didn't force them to originate these loans. They didn't originate them. And when they bought them because they were rated as the safest securities they could buy. Of course, the banks and the credit agencies were lying about how safe they were, and Fannie and Freddie certainly made some bad decisions, especially not having enough capital on hand to cover them. But to make the assertion that GSEs are somehow responsible for the subprime phenomenon and its ensuing crisis is ridiculous, at least according to the experts.
And you're way off on the proportion of government-sponsored enterprises backing these loans. That is almost a third, or 33.33% of all outstanding mortgages. So no, it's not 3%.
Hey, you can chalk a win up for you kinda there. When I said the GSE market share fell to 3%, I meant to say the FHA market share fell to 3%. FHAs are a type of GSE, and I guess I got a little dyslexic with the three-letter words. The FHA market share absolutely did fall to 3% by 2007. In fact, it was under 2% for 2005 and 2006. But that was my bad. That was definitely a misspeak on my part. However, the whole point of the argument was that GSEs were losing market share through the early 2000s, which they were. They went from like 70% of newly originated loans to like 40%. When the bubble really started expanding in 2006 and 2007, private lending far outpaced GSEs. My whole point of using FHAs that I misrepresented as their overarching umbrella of GSEs was that FHAs are originated as a government-backed security, where Freddie and Fannie got a good portion of their market share by purchasing privately originated securities. I tried to present it this way to show that the government's role in subprime mortgage origination was basically non-existent, because the whole point of the argument was if GSEs were responsible for pushing, facilitating, and securing subprime lending practices, therefore ultimately being responsible for the crash. And the answer, according to all of the experts, is a pretty resounding no. It was my bad. I said GSE instead of FHA in that one particular instance, but switch those out and the statistics and the argument remain exactly the fucking same.
And Mr. Wagon, your data on first-time homebuyers was also incorrect. You mentioned how the predatory lenders didn't go after first-time homebuyers since they preferred to have people who already owned homes or some kind of equity. The repeat homebuyers actually have a higher percentage of paying off their mortgages than the first-timers.
I really didn't say anything of the fucking sort. Nowhere did I talk about repeat homebuyers. I said that many of these subprime predatory loans were targeted at people who'd owned their homes for a little while as a cash-out refinancing option. And because of that, people lost stable mortgages that they had on their homes and their equity in their homes, which made them more likely to default. And according to the idiots at, Harvard, that accounted for 1.5 trillion in losses versus 280 billion had it not been done. And when I referred to people purchasing second or third homes, I meant as investment properties, not as their primary residence.
Now, Mr. Joe Wagon, you're a smart guy. I like you, but your numbers were completely wrong.
Yep, I guess that'll happen when you take everything I say and pretend I said the opposite. So, what are you gonna do?